Let's go with Apple, coming off 4 straight down days. Tech giant eyeing India now as its next big market and the source of a big percentage of its cell phones. The country's finance ministry says it's going to be the 3rd largest economy in the world within 3 years. Are you buying Apple here, Steph?
I actually am, Tyler. I was underweight the stock all of last year, but I think down 8% from its highs, trading at 28 times forward estimates relative to its historical average of 36 times. I think it's actually very attractive. We had a good quarter from the company in terms of earnings up 16%, EBIT up 12, free cash flow up 26. They got the March quarter guide down out of the way, and now I think the setup is pretty good into WWDC, which is their big event, where I think they're going to announce AI initiatives, possibly for the iPhone 16, which would be a positive for ASPs. So I like the story here.
All right, let's move on second to a company that has spent a lot of time investing in hybrid automobiles, and that is Toyota Motor. It is down slightly today. Japanese car maker, though, up more than 20% this year so far, as its gamble on hybrids seems to be paying off. Investors are watching closely, though, as the Japanese economy slips into recession. You think Toyota can weather the downturn, Stephanie?
I do, but I would buy this on pullbacks, Tyler, but I do like it. They're the best-selling automobile company in 2023. The hybrid strategy, as you mentioned, is going gangbusters. Actually, it rose 63% year over year last year, and that's 33% of their total revenues. They have a new product cycle story for 2024 in terms of new cars, just refreshes, special editions, that sort of thing, and it's cheap, 10 times earnings.
The refreshed Prius is a really good-looking car. I saw one on the road today. Anyhow, the final buy is Las Vegas Sands, already up more than 10% so far this year. Performance in Macau continued to impress as high-net-worth consumers show no signs of slowing. Stephanie, your take on Sands?
Yeah, I like Las Vegas Sands. It actually in the past year is down 1%, so it hasn't done anything. And I do think it's a play on Macau. Macau is 63% of EBITDA. Singapore is the remaining EBITDA. So you're making 2 big bets on those regions. And we are starting to see visitation increasing in Macau as well as Singapore. And this company is going from VIP revenues, that being their big part of their business, to premium mass and mass. And actually, they're seeing nice momentum sequentially in the upper lower double digits sequentially. And we're also seeing operating margins expand as well. So I like it. $5 billion in cash, $2 billion buyback. I like it a lot.
Las Vegas Sands has no Las Vegas, right? Or does it?
That's right. That's right. Nope. It's all
no
Macau
Las Vegas.
and it's
Viva
all
Las
Singapore.
Vegas, said Travis Kelce. No, sir. All right, let's go to the bail, which would be Nike, Stephanie, down more than 5% to start the year. More than 1,500 job cuts announced in a broad restructuring effort in the wake of weak demand, especially in its huge China market. Oppenheimer downgrading the stock. No quick fix. Stephanie, you agree with that?
I absolutely do. I've owned this in the past, but they've lost their way. So numbers have been coming down. China is a problem. We just talked about services being very strong in China. Goods, not so much. We have problems in the EMEA, and also I think North America is actually it's like fatigued. They underinvested during COVID, and now they have to reinvest. So what are you going to pay on a multiple basis for a reinvestment story? As a result, you're going to see lower earnings and lower revenues. I think 29 times is too rich, so I'm a bail.